Hey guys, this is Rudy coming at you live from Palm Beach in Florida. It is Monday. It is May the 30th. It is Memorial Day in the United States. Last Monday it was Memorial Day in Canada. So if you're celebrating a long weekend, just keep in mind that the reason why we are having a Memorial Day is to remember to give thanks to the people who sacrificed so much for us to actually have a little bit of freedom. What I want to do is, this is kind of the first of let's call it a mini two-part series. I want to tell you about two stocks that I am buying. The first one that I'm going to cover is Petrobras, and I'm going to tell you sort of why it is that I'm invested in Petrobras and I have been building a little position in Petrobras. And when I say that, I don't mean we're jumping in boots and all, but at the same time, there is a compelling reason for me to invest in Petrobras, and I'm going to kind of walk you through it as we go. So let's take a quick look here at the snapshot for Petrobras. And obviously this was as of the market close last Friday, because today is Monday, Memorial Day, and markets were closed. You can buy Petrobras today for about $14. And you can see at the bottom left here, it's sort of left of right-hand side in terms of where it's trading, in terms of its 52-week range. It hit a high of $16.30 not too long ago. And then the president of Brazil, President Bolsanaro, fired the CEO of Petrobras, which is about the, I think, the third CEO that they have in 2 years. These things are not good. So on that day, Petrobras pulled back about 12%. So I added a little more to my existing position, and I'm building the position as we go. But why would you be doing that, Mr. Oxy? And I'm going to tell you. So firstly, Petrobras is not a small company. It's a almost $100 billion company. But look at this middle section here in the red dotted line. It has a PE ratio of only 4, which means it's super cheap. Now, in a way, I've said this many times before, companies can have a low PE ratio for all the wrong reasons. In the case of Petrobras, one of those wrong reasons is the fact that it's state controlled. And the comment that I just made about Bolsonaro firing the CEO is an example of that. This is a situation where the leader of the government on the day can fire or hire and appoint a new CEO as he or she deems fit. But look at the annual dividend yield here. Currently, it's paying a dividend of approximately $4 at a $14 stock price. This is yielding about 30%. Now, this is just an extraordinary dividend. I'm going to come back to that one in a minute. But this is almost the primary reason why I decided to park some money in Petrobras. And as I said, I've been building the position anyway. So as Bolsonaro fired the CEO and Petrobras tanked, 12% on one day, I also bought some more. You can look at the institutional holders, not too much, and then the short interest only 1%. You'd be crazy to short Petrobras at the current price of $14.21. Now, why do I buy Petrobras at all? So you can see that the dividend date. So if I just go back to the previous slide, the ex-dividend date was May the 24th, and the dividend pay date is June the 27th. In other words, another one coming up. But why did I buy Petrobras? So you can see on May the 24th, I actually received the dividend. And with that dividend that I received, which is about $3,300, I was able to purchase another 238 shares of Petrobras for $14.17. So just below the current trading price that it closed at on Friday. Now I have some fees attached to that. An Adr Fee is an American Depository Receipt. It's a fee I have to pay, which is a few pennies per share. And then, of course, they withhold foreign tax on the dividend that I received. And there was a little bit of change left over, and that bought me an extra 7 shares of Petrobras. So in total, I added approximately 245 shares of Petrobras just based on this particular dividend, which is obviously quite rich. So in addition to adding through the dividend that I receive, I am also purchasing little bits of Petrobras. As I said just a minute ago, when it pulled back 12% in one day, I actually bought some more. Look at the company very quickly. Net revenue, $53 billion, and a net profit of approximately $7 billion. And here they are expressing it in real, which is the local currency, whereas the net revenue is expressed in US dollars. There's a little bit of a delta between the Brazilian real and the US dollar. So you need to take that into consideration if you're doing the math on that one. The daily output is very, very interesting, right? So that company that we all made an enormous amount of money on over the past year and a half, 2 years or so, Occidental Petroleum produces just more than 1 million barrels of oil equivalent per day. Petrobras, on the other hand, produces more than double that, almost double that, 2.8 million barrels of oil equivalent per day. The oil production specifically, 1.8 million barrels per day. This is oil. And obviously, as you know, by now, the oil price is high. So if you're producing 1.8 million barrels of oil per day, you would, in theory, be printing money, except the only people who really print money is the government. And in this particular instance, the government, as governments usually do, interfere quite handsomely as it relates to Petrobras. They also own a vessel fleet of 131 owned and chartered vessels. And in addition to that, they have nearly 8,000 kilometers of oil pipelines and approximately 9,000 kilometers of gas pipelines. For people who use Imperial, 7.7 kilometers is probably around about 5 miles or so. Anyway, they own pipelines, they own a vessel fleet, and they're producing almost 2 million barrels of oil per day. A quick look at tip ranks tells me that there's not an enormous amount of upside here. So if you're buying the stock in order to watch it go from $14 to $28 or thereabouts, that's highly unlikely to happen. In fact, Petrobras has been trading in this range sort of between, let's say, $12 and $18 for a long, long time, probably 5 years or so. So don't expect the stock price to move too much. So I have a little bit of potential upside on the stock price, but most importantly, I am buying Petrobras for the dividend. So in other words, as part of my parking lot, this is a stock that I purchase and I hold on to it. And as long as they keep paying me a nice, big, fat, juicy dividend, I will keep the stock. If they cut the dividend, I'll probably dump it instantly. In the United States, there are only 2 analysts providing a rating on this. One says buy and one says hold. And obviously the target price around $17. TipRanks has it at a 9, outperform. Most of the sentiment in the market is bullish on Petrobras. But, you know, I don't care too much about this kind of stuff because it's more related on news than on actual fundamentals. However, if I look at my international portfolio, then I can, instead of looking at 2 analysts, I can actually look at 13 analysts. One of them is bold enough to say buy, 6 of them say outperform, and the other 6 say hold. So overall, the sentiment from 7 of these analysts are bullish, and 6 of them are saying hold. I'm kind of okay with that. This is CFR.A. If we look at the 12-month target price of $15, it's only a slightly up higher price than where it's currently trading at around $14 and a few cents. And then over here, if you look at the analyst risk assessment, it says high, and this is small on the screen, so I'm just going to kind of read this for you quickly. Our risk assessment reflects Petrobras's position in a volatile, cyclical, and capital-intensive sector. We see its exploration as success and large domestic oil reserves being offset by limited financial and engineering resources to develop them, which may lead to delayed project execution. One of the reasons for that, once again, you can almost, as I do most of the time, blame government. Anyway, CFR.A has Petrobras at a hold, 3 stars. If I look at Morningstar, which is one of my favorite analyst reports to study, this is also recent. This one is May the 25th. The one that I just shared with you of CFR.A is May the 28th, so just a couple of days ago. The fair value estimate, $16.40. Currently, we're at $14 and let's say 40 cents, so there's a $2 uptick there. And they're saying it is overvalued in terms of where it is currently trading. Now, whether it's overvalued or not is obviously debatable. But at the end of the day, they're on one hand saying it's overvalued, and on the other hand, they're saying the last price was $14 and their fair value estimate is $16 and a bit. Now, it may hit $16 in the near term. It may also hit $16 by the end of the year. Once again, this is not why I'm holding Petrobras. I'm holding Petrobras for the dividend. What do the bears say? So what's the negative thing here? Petrobras has struggled to increase production. Government control implies financial or strategic decisions, and they benefit the country, but could harm shareholders. The Brazilian president, including replacing the CFO, recent actions. So I mentioned that just a minute ago. There's a lot of government interference here, and at the end of the day, there are very, very few things that government actually do effectively, or that the government can actually say, we did this really, really well. In the majority of instances, when the government gets involved, it's an institutionalized disaster of epic scale, and very, very seldom results in something good. And regrettably, with Petrobras, the government has a lot of interference and a lot of influence in terms of what they do. What do the bulls say? The size and quality of the pre-salt reservoirs offer Petrobras a low-cost supply that is unrivaled by any other global integrated firm. Petrobras's ways are largely behind it. Plans for disciplined spending, focusing on the highest quality assets, deleveraging, and dividends with surplus cash flow. With investments to increase diesel production, Petrobras can capitalize on growing domestic demand, in addition to growing global demand for its refined products. Recent price revisions by the government. Once again, the government doing price revisions is probably, arguably, or debatably of no consequence, or shouldn't be, because the market should dictate the prices. But that is a statement that I probably say with a capitalistic mindset and the government interference here. They would like to ensure that that the Brazilian people pay a lower price at the pump. So whatever they want to do, they want to look good, especially this year because it's an election year. And in October, Bolsanaro might win re-election, but if he doesn't, then Lula, the left-wing candidate, will win election as Brazil's president. So on one hand, you have these bookends, right? So if Bolsonaro wins, then it's kind of back to status quo, which we've had for the past 4 years or so. And if Lula wins, then we don't know where it's going. So there's some macro environmental risks involved here, which includes the upcoming election. Divestment of half of its refining capacity should high-grade the portfolio. Should. Well, I don't like should because that means it hasn't happened and we don't know what's going to happen yet, so it's not really predictable. So it's kind of a bit of a mixed bag between the bears and the bulls. The bears, or the bearish sentiment is mostly related to government interference, and the bullish sentiment is in relation to a number of different things, including increased production, obviously the higher prices of, in this particular instance, Brent, growing domestic demand. Well, domestic demand in Brazil is relatively finite, but the global demand is still very, very high, and divestment of some of the refining capacity. So it's an interesting sort of snapshot of where we are. Take a look at this one just very, very quickly. This is comparing Petrobras to Chevron to Exxon to BP. Now, if you look at the assessment here by Morningstar, they rate Petrobras 3 stars, but it's overvalued. They also rate Chevron as overvalued with only a 2-star rating. Exxon, on the other hand, is fairly valued with a 3-star rating, and so is BP, fairly valued with a 3-star rating. So if you're somewhat risk averse and you don't appreciate the volatility, you might want to stay away from the first two, Petrobras and Chevron. And if you wanted to park some money in a high dividend paying stock, you could look at Exxon or potentially BP. Both of those pay a dividend of around 4% compared to Petrobras, which is currently yielding at the current price and the dividend that they're paying close to 20%. So a very, very rich and juicy dividend. If we look at the chart for those same 4 stocks over the last 6 months or so, you can see that Petrobras was sort of occupying the middle, and 2 of the other super majors, BP and Shell, kind of bringing in the rear end or the bottom. But Exxon and Chevron has certainly outperformed in that regard, not only Petrobras, but also some of the other super majors. So it's a good time to be in a US energy stock. And if you had purchased any of the large US energy stocks like Exxon and Chevron, Marathon, ConocoPhillips, Devon, Occidental Petroleum, you're probably happy and smiling all the way to the bank. What about the shareholder, Mr. Oxy? Can we look at the remuneration as part of the dividend policy and see whether it's sustainable or not? Well, the company establishes a minimum annual compensation of $4 billion for fiscal years in which the average price of Brent is above $40 per barrel. Now, of course, we're way above $40 per barrel on Brent in terms of the current futures price. So they can easily achieve that target of $4 billion for the fiscal year, regardless of its level of indebtedness. Now, that's an interesting comment because in reality, as much as government interferes, government is also the agency, for lack of a better word, that prints money. So when they say regardless of its level of indebtedness, arguably, figuratively speaking, Petrobras can almost take on whatever debt it wants because if the Brazilian government needs to print more money, they can just print more money and then pass that indebtedness on to future generations. The minimum annual compensation will be, the compensation in terms of shareholders, so dividends, will be equivalent for common shares and preferred shares. Now, I have regular communication with one of our friends in Germany, Manny Boger, and Manny has been doing quite a deep dive on Petrobras, not only for himself, but also for me, and he's been sharing this information with me. It's really, really good stuff. So thanks for that, Manny. And one of the things we looked at is the difference between common shares and preferred shares. Now, they're saying that the minimum annual compensation would be equivalent for common shares and preferred shares. So in theory, there's no particular reason why you would want to own the preferred instead of the common, even though you can just buy it on the open market. In the United States, I can buy Petrobras, PBR, and I can also buy Petrobras preferred, PBR.A. Either or, I can buy them effectively the same. And it's quite an unusual situation where any person entering the market can simply open a position in preferred shares and then just hold them if they wish to do so. But we do have that choice. There's not, I've looked at the preferreds versus the common. There's not a lot of difference in it, neither in the price nor in the dividend. There are benefits to holding a preferred, because in the event of a bankruptcy, for example, the preferreds get paid out before the common shareholders will get paid out. Other than that, it's probably much of a muchness. In the case of gross debt equal to or less than $65 billion, it comes back to the previous line, regardless of its level of indebtedness, the company must distribute, this is a command, distribute to its shareholders 60% of the difference between operating cash flow and investment. That is one of the reasons why the dividend is so high, and that is one of the reasons why the dividend seems to be relatively sustainable. Now, if I kind of summarize what I'm saying in this particular example, what I'm sharing with you is that I have been buying Petrobras. In addition to reinvesting my dividends, I've also bought some more shares every time there's been a pullback, because it is quite a volatile stock. But the thing that's interesting about it is that I already know that I can return, in this particular example, 17, 18, 20% in terms of dividends. So if I get a little uptick on the stock at the same time, and it goes from like $14 to $16 or whatever, that's a bonus. Conversely, if the stock pulls back from $14 to like $12 or something like that, I'm not too fazed about it, because my primary objective here is to use Petrobras as a savings account and just sock away the dividends that I receive on a regular basis. And it's enrolled in a DRIP, which is dividend reinvestment program. So effectively, I'm just buying more shares. But that's my sort of high-level thesis for investing in Petrobras. Let me know what you think. Do you have a position in Petrobras as well? If so, let me know maybe why. If not, maybe it's something that interests you. I'm not recommending it as a buy. I'm just sharing with you some of my thoughts on Petrobras and explaining why I have been buying Petrobras. So this is part one of a little mini series of 2 stocks that we're going to cover. The next one's Home Depot, which will be in the next video. And until then, this is Mr. Roxy saying thanks for watching. I'll talk to you later. Bye-bye.